Hello and welcome. My name is Brendan Wendell, Chartered Market Technician, and I'm going to go over some of the equity index futures for you as a little bit of analysis this weekend. Kind of look at the big picture here, starting off with the S&P 500, and I'm on a monthly chart. And the reason why I'm bringing that up is this month, which is, kind of halfway into the month right now. We still got plenty of time. I'm recording this on the 13th, as you can see at the bottom of my screen. We're halfway through the month, and right now we are well below what is what you see here. This is the 13 period simple moving average. I believe it's a simple, yeah. So again, I'll put it here, 13 simple moving average. When it comes to the monthly, is just a little over 1 year's price average, and it's pretty significant when you look at the S&P 500 and the index futures themselves specifically. Oh, sorry, let me turn off the vibration there on the phone. And the reason why it's significant is if you look at the history of this, when you close below that moving average, pretty much every single time it's ever happened, you end up making lower lows following that. So if we get a monthly close below this, you can see that our previous lows occurred last month in February at about 41.0175. Sure, that's the snap mode low. Yeah, it is. And therefore, we should actually have new lows coming in April if that's the case. So looking back, you can see this was the case in 2020 during the COVID pullback. We had a new low back there in 2018 as we pulled back. You go to 2015, same thing. You made that close below and eventually made new lows. Here, made the close below in 2011, eventually made a new low, just barely, but it did it. Same thing here in 2010, made a new low. 2008, well, obviously, that was the crash. 2000, you see that we made the close below and, of course, made fresh lows. And even here in 1998, towards the beginning of these futures, you can see we closed below, eventually made a new low before we were able to go higher. So as I said, this is very significant to watch, and we'll look for this at the end of the month to see if we close below that moving average, then we are likely to see new lows in April or May, maybe even get a bigger pullback. Looking at the monthly chart, this is not the demand zone. The demand zone is actually pretty far down here towards 3,200. So I don't know if we're going to pull back that much if we get that big of a bearish market, but it's not out of the realm of possibilities, obviously. That would give us a correction of about 27%. And considering the major crashes are all about 50%, that's only halfway down. So it depends on whether or not we go into a full-blown recession in the U.S. Doesn't look like that's going to be happening. But as far as the bearishness, like I said, we are seeing signs of bearishness because we're getting that possible close below the 13-period simple moving average. Now, going to the specific contract, whoops, I got to make sure we do the rollover here. We've rolled over to the June contract. I'm going to go to the weekly chart to start off with on the big picture here. And I'm going to change the moving average. We don't need that one anymore. Here we are. And you can see we're in a nice bearish trend, making some fresh lows. Also, for the first time in quite some time, we have gone below 40 on the RSI. That is extremely bearish for this market and telling us that we're likely to see more movement to the downside. So expect continued pressure downwards. As far as a demand, well, the weekly demand that I'm seeing is here at about 39.09, so we could break the 4,000 barrier, which would be very psychologically damaging to a lot of portfolios and could trigger some mass panic to the downside. So going down to the daily time frame, you can see we got a nice downtrend that's established. Recently, however, we have a positive divergence, and what that usually means is a bit of a pullback in whatever trend you happen to be. Actually, I take that back. It's not divergence. We made higher low and higher low. So divergence would have been if we made the lower low here. We actually made a higher low and just confirmed. So I take that back. And actually what we see is on the rally that we just recently had, you have a rally here and you had bearish momentum. Couldn't really get into bullish territory. The thing that I see now is that the momentum is getting stronger to the downside because when we made the next peak, you can see that we couldn't even get as high on the RSI. So the bullish momentum has really disappeared altogether and the bearish momentum is building right now. I'm actually curious to see if we look at a simple moving average again and change it to 50. And nothing really going on there. Let's see, 21. And you can see that's starting to hold a little bit more as a trend line. The 21 simple moving average doesn't necessarily mean much, but on the daily, actually 21 would be the average for the entire month. When you can figure there's about 21 to 22 trading days per month. So we're below the monthly average and kind of starting to use that now as a little bit of a supply zone. We've been staying below it for the most part, a couple of little forays above, but not much. So this is continuing to push downwards. We had a bit of a retracement of our last impulse and are now, looks like, continuing down. So our immediate target, if we continue this week to push to the downside, would be 41.53, then 40.46. What I want to also take a look for is our nearest area of demand to let us know where we might see some sort of a bounce. And we're not going to see it on this regular contract, so I'm going to have to go to the continuous. And once again, I'll put in the extensions based on the previous impulse, the correction. There we go. And now we can go ahead and put in that horizontal line once again to see, do we have any sort of demand nearby? And the nearest daily demand is right here, 39.67. So again, a little under 4,000, which would be pretty damaging psychologically to a lot of people. And once more, it could cause massive selling pressure to really pick up and cause prices to drop quite a bit. Let's see, we got two zones right there. So we're likely to have a pretty decent bounce as the institutional buying might come back in, help push us a little bit higher right there. So let's go ahead and clean up the moving average here. We don't necessarily need that. There we go. And you can see that we do have some overhead demand, or sorry, below we have demand. As far as supply, really, we don't have anything right nearby. We did see this impulse to the downside. If we do try to rally, we could break that high and retest this previously used area of supply. You can see we had rally, base, drop, tagged it just right there before that last impulse, and we tried to rally back up. We didn't really, I wouldn't call this a good supply zone. Technically, yes, you have rally, 1, 2, 3, 4, 5 basing candles before that drop, but it didn't really move very far in comparison to the height of the zone, so I wouldn't consider it to be a good zone. Anyway, continuing to drive this down into smaller time frames. Sorry, wrong keystroke. Go down to the 4-hour time frame. Let me clean this up a little bit. There we go. And actually, we'll start with a fresh chart. I always like to keep that clean. You can see that we started to drop from some of the area of congestion before. Really, this was, I suppose, drop-based drop supply that we turned down from. Tried to violate it, just barely went above, I think. Either way, we did move down. We're still seeing lots of bearish activity here. We have not quite broken below 40, but if we open up and go below 40, that's likely to see new lows being made in price. And I don't see any reason why not, to be honest with you. This is looking very, very bearish. We had that impulse down, as I mentioned, with the correction back up. So we have some possible targets along the way for pausing, but overall, this is still very bearish. You can see that with the big topping tail that kicked us off. So we tried to rally, but had no buying pressure there and eventually just gave up. So on the move down, this has already been used as demand. We're likely to go through that area pretty quickly. Mark it off anyway, just to show you. So we went a little over a quarter of the way, probably about 40%, 30, 40%. So likely to see that there isn't a whole lot of buying pressure left right here. It might just slow us down a little, but it won't stop us. And therefore, if we're looking for a target here, we're going to have to go back a little bit further. And we'll see if it's even on this contract or if I have to go back to the continuous. Oh, it is. So here we go. Zooming in a little more, there's nothing in this area that constitutes a quality area of demand. So looking further back, you can see that was actually a test of a previous area anyway. Check and mark here for us. And now what I'm looking for is a fresh zone. I would say this is probably it. Rally, base, and rally. So 39.80, and there's another small area just below that on the 4-hour time frame. Going back to our current price, you can see that we have the Fibonacci extension, which is never as powerful as actual zones. This has already been a tested zone, so I'll remove that. It looks as though our target is 40.33 and then below 4,000 at 39.80. So things could get pretty ugly pretty quick here. Dropping to the 60-minute time frame just to see if there's any opportunities to join this downtrend. First of all, you can see we tried to rally, but recently on Friday afternoon, we broke the lows, so we snapped the uptrend. We're not officially in downtrend here for trading on Sunday evening going into Monday, at least on the 60-minute chart. We're sideways, but we no longer have that uptrend because we obviously dropped below 40 on the RSI and broke the prior lows. So can't be in an uptrend, not officially in a downtrend yet. We need to rally, make a lower high first. If we do, this would probably be a decent area for supply. And if you wanted to fine tune that, would probably count on a smaller time frame. You have drop, base, drop. Now I usually go wick to wick when there's only one candle for the basing. That's why it's very, very wide, because of that wick that went below. But the origin of the selling pressure really is going to be somewhere near the beginning of that candle. So you can almost narrow that down or even look at a smaller time frame. But it's 42.63 and a quarter to 42.65 that has the strongest imbalance of buying and selling pressure. If you want to include the whole area, again, you're looking at 41 to 65, so over 20 points. And let's drop this down to a 15-minute chart to see where we might be able to get in on the short side. We see there's an area right here. Just below the 60-minute zone, we have a 15-minute supply zone. Although it doesn't quite qualify. And I say that we have drop, base, base. That red candle did not clear the prior candle's low, and it didn't close inside of the basing candle. So this is not really a great zone. However, that is the origin of lots of selling pressure, so I wouldn't necessarily count it out. But I'd wait for a little more confirmation to be able to trade that. And it is kind of wide still, too. We have a lot more volatility than we've had in the past. The average true range has gone way, way up. But that's where I'd probably look for some sort of a shorting opportunity. And going into a 5-minute chart, if you wanted to go down that low, just to try to trigger some entries on Sunday, you can actually see there's a little pocket of selling pressure that picks up right there. Drop, base, drop, 42.17, 42.22. And I'll look for that. There's also perhaps a little something lower here. And 42.05 to 12. Had some good selling pressure coming out of that. So we definitely have opportunities to the downside. Even the fact that we've gone sideways here at the end of the day, we might just break out of that sideways motion to the downside rather than rallying. So there's plenty of opportunities to look for shorts. I'm thinking this week we may, let's see, if we go back into that 4-hour chart, I think we might actually be able to break 4,000 this week to the downside. So looking for that 39.80 ultimately as our downside target. We can go over to the Nasdaq now, and I'll start off with the continuous contract and again go out to the monthly just to get a big picture of what's going on here. And, well, we've started moving down, obviously. We're in a monthly demand area, but not so sure this one's going to hold. We've been in here before, last month, actually 2 months ago. We went in, bounced, in, bounced, in. Doesn't look like we're going to bounce this time. So we're taking out all this buying pressure that was trying to hold us up and may seek out the next level down here, which is 12,109, 10,656. Dropping down to the weekly time frame, let's see what we got going on there. And on the weekly, we are also in, well, it's pretty much the same zone. And we're going to push through that. We got a lot of momentum to the downside. So no problem in breaking those zones, to be honest with you, and pushing down. So for fine-tuning this a little bit on the weekly, you can see there's a rally-based drop, or sorry, rally-based rally right there. And that's 12,139, 11,503. I don't think we're going to hit that next week, or this week coming up. We'll probably take 2 weeks to get there, but there's lots of bearishness. Go down to the daily chart, still seeing a strong downtrend right now. Lots of momentum downwards. Now we're starting to see a little bit of a lack of momentum. We're not getting as big of an impulse down as we've had before, but we're still moving. If we look for some downward targets for this week, we have initially 13,062, then 12,570, and then eventually 11,774. So that was from the weekly demand, that 12,139. We can take a look at this daily time frame and see what we might have there. Let's see, we got that. Going back. And we are pretty much hitting this area of demand. There we go. That's an area that we've hit before, so not likely to hold too well. And really, there's nothing to keep us from getting down to that weekly demand zone. So looking at this time frame, where are we on the daily here still? You got drop, base, rally for your next target at 11,987. Below that on the daily, we have another zone right here. Looks very good. Might be a retest of a prior area, though. Not necessarily fresh. But that's where our next targets are. Again, I prefer the zones, the physical zones with the orders there versus the Fibonacci's that are just numerical areas. So we've got some downside targets, but plenty of selling pressure to push us down to those areas. We have rally, base, drop. Not really a good supply zone here. The fresh, well, it's not fresh. That supply zone already hit right here. So let's go to the contract specific. Again, we're looking at June right now because the rollover already occurred. And pretty much the same picture, but I don't have the zones on this one. And we go down to the 4 hour. I'm really not going to see much on this because, well, we do have supply right here that we could possibly use for entry. If we do try to rally it all, it hasn't quite finished. You know, you see we have rally, base, drop, but really I need 2 follow-up candles after the leg out candle. We don't have that yet. So we have to wait to see if Sunday night going into Monday, we actually open up and push down first and give us that next new low and actually give us enough movement down compared to the height of the zone to use this as a quality zone. So a couple of characteristics there. I talk about this more in my E-mini Think Tank courses. I actually give you step-by-step instructions on how to identify quality zones so they meet the criteria. So there's pretty black and white. It's, you know, you follow the rules, you find quality zones. And if you trade the quality zones, you have better results typically. So anyway, this is overall downtrend, and we want to trade in that trend direction. I won't have any demand zones below to target, so the only thing I could really do is use the Fibonacci extensions or use the continuous contracts I was using before. But you see our first target is going to be about 13,106. Sounds familiar. I talked about that before. And then we got the 12,575, and then eventually down below 12,000. Going into the 60-minute time frame, just trying to fine tune this to see if there's an entry spot for us. And we do have a pretty good supply zone here. If we can get in, rally, base, base, and drop at 13,732, 13,858 for a possible entry. We are starting to form a lower zone, but we haven't completed it yet. We have drop, 3 basing candles, and then the drop, but we need to have 2 follow-up candles after the leg out to give us a good zone. So still waiting on that. We'll see what if it happens. If we want to drop down to the 15-minute, down at that lower area I was just mentioning, yeah, there is actually a zone. So we have drop, 3 basing candles, and drop. So there is possibility of selling 13,434, 13,486 and continuing this downtrend. We'll go out to the YM. And on the Dow, I'll go out to, again, the monthly chart and the continuous. I'm going to start off with a clean chart here as well. And we see that we had divergence where prices were trying to rally and make those new highs, but the indicator was saying, nah, we don't have the momentum to do this. And obviously in January of this year, we started tumbling to the downside. We see that in all the markets. So as far as our demand zones go, we have our nearest demand on this rally-based rally, 28,379 to 25,953. Going into the weekly time frame, lower highs, lower lows, downtrend, pretty easy. We also see that we are below 40 on the RSI. As far as weekly demand, it looks like it's taking us much, much lower. We do have a little bit of a pause point perhaps right here. And we may end up hitting that this week for the bottom. We got 31,637 to 35,12, drop, base, and rally as our first target for this week. And if we break that, which we easily could, then we have other areas below, I'm sure. Going down to the daily time frame, I'm actually going to go to the specific. And on the Dow for June 2022, we have nothing right nearby. Unfortunately, the nearest daily supply zone is up here, rally, base, and drop. So don't see us getting up to 480, 34,480, 34,950. But we could, and if we do, then that's going to be a little bit of supply to push us right back down in this downtrend. So dropping into the 4-hour time frame, just narrowing it down. We had an interruption to the downtrend. You can see we made some higher lows and higher highs. That's likely to end very soon. If we can break this low, the downtrend resumes. And at the time we break the low of 32,694, we'll probably also break 40 on the RSI. Both of those together gives us a return to the bearish trend. So if that's the case and we return to our bearish trend, we've got the impulse that we previously had, our correction that we were in. Looks like a pretty deep correction anyway. But our first target would be 32,476, and then below that, 31,788 and 30,676. As far as demand, this has already been tested. I don't think we've got anything else close by. Nope, definitely don't. So that's what I'm seeing on this 4-hour time frame. If we're going to go down to the 60 minutes, see if there's a better entry spot if we start turning more bearish here, which this has been the market that's been holding up the best. It's been the strongest. But with everything else being very, very weak, it may get dragged down by these other markets. Don't really have a good supply zone here to be able to jump in. So I'm not going to mark anything there. We're just going to have to wait and see. Like I said, if you're looking for shorting opportunities, you're better off shorting the weak markets rather than trying to fight with the strong market. But if the markets are going up, this would be your leader to the upside. And when it hits supply or starts showing weakness, that's where the other markets are going to be free to fall. So if you check out some of my educational videos I've done, I did one on following the leader, and I talk about how to use the leadership, whichever one of the four it happens to be, Dow, S&P, Nasdaq, or Russell. You can see which way the markets are going to go and where they're likely to reverse. So you check that video out as well. Anyway, going on to the Russell, continuous contract. Again, big picture first. Go to the monthly here, and I'll refresh that and give us a clean chart to work with. You can see we turned down quite a bit in 2022 after a bit of divergence. And now not really seeing much of anything here. The next monthly demand, if we do crash down, is way down at 1560 to 1426. That's on the monthly time frame. Going to the weekly, we see we're stair stepping down. We've got lower highs, lower lows, so definitely bearish trend right now. Don't want to fight that. And well, we could probably say we've got a weekly supply zone. Rally, base, drop. Missing the second follow through candle, but it did break down pretty well. And it broke out of some prior lows on the leg out. So again, pushing down towards our demand down there at 1560. I don't see anything else in the way. And if we project from our most recent impulse, I have a couple of targets along the way here. And I'm kind of curious to see if the last Fibonacci's worked. You see impulse, correction, and yeah, you can see we stalled right at the 100% of the previous impulse. It's kind of hard to see with both of these in here, so let me do that again. Right here, you can see impulse down, correction up. It didn't go to the low because that's really where the correction began. And you can see it projected a possible target for our downside move was duplicating the prior move. That's all. So now we're dealing with the new impulse and the correction. And then we have our downside targets, 1859, 1707, 1462. Dropping to the daily time frame, we are moving a bit sideways, aren't we? And that's kind of the MO of this market. What it's been doing is it moves sideways in a range and then drops to another sideways range. Let's see, I want to go here. My rectangle, you can see this is the range I was talking about previously. And now we've moved into just a new range. So we're likely to break down with the other markets into a new range. Now, normally when you break down into a range, if I go to the weekly chart, we should be stopping at prior demand. So you see here, really, we just stopped at the prior lows. On this one, we did stop at a demand zone, didn't we? Right there, we paused at the area of rally, base, rally. So now if we're going to break down and follow the same pattern, we should break downwards and then go into a demand zone and go sideways again? Well, we happen to have a weekly demand zone right here, 1807.4. So I'm going to get rid of the Fibonacci's. But basically, if we follow the normal pattern, we should look for a move down on the weekly chart. And this might be the week of the move down. Let's see, we had 1, 2, 3, 4, 5, 6, 7 drop. 1, 2, 3, 4, 5, 6, 7 drop. Again, so patterns, right? So if this repeats, this should be the week of the drop, following then to a new sideways pattern right around 1807. Now, it won't be exact, but it'll be in that area, which means we should be looking for bearish opportunities this week. Going down to the daily time frame, I don't really have anything here to be able to enter in as a short. For supply, we pretty much, nothing. So I'm going to go down to the specific contract and the 240 minute. There we go. Clean this up. And looking at the 4-hour chart, we obviously had that big topping tail with lots of selling pressure. We haven't formed a zone here yet, but it looks like it's trying to form a zone. We have rally, base, and drop. We need a second new low to confirm this and more movement. Now, that's not a good demand zone, but there is a lot of buying pressure that picks up at this area. So we might get a little bounce before we were able to drop. The thing is, on our rally right now, these peaks, even though it went really high up, we failed to get above 60 on the RSI. So that's pretty bearish. It's sideways motion, but overall still somewhat weak. And it looks like, I think still we're going to drop this week. Our initial target to the downside is the 4-hour time frame. We have a demand in 1904, 1882 right here, drop base rally. I would say that's a pretty good target to the downside for our first initial bounce. Now the question is, where do you get short? Well, we fine-tune this a little bit, and it's not great, but we do have supply, rally, base, 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 and drop 2016 to 2044 is really wide. So if we want to narrow this down, perhaps we can using 15-minute or 30-minute time frame. On the 15, I have rally, base, and drop right there. And there may even be a smaller zone, a little bit lower here. 1986 to 1992, you've got drop, base, 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 drop. I'd wait for confirmation on that. This one's a lot stronger. You have rally, base, and drop. So like in the 2012 to 2026, a lot better for short. If again, the target being way down there, 1904. So that's kind of what I'm seeing. As I mentioned, the Dow is the stronger of the indexes. The Russell and I think the Nasdaq are the weaker. If we go out to a daily chart here, I'm comparing all the markets together, and we really started dropping on January 4th. So again, if we do a comparison, you can see the Nasdaq is definitely the leader to the downside by far. So the Nasdaq bottoming out will lead to the other markets flattening out, and even the Dow possibly rallying. You see the Dow is the strongest, holding up the best. But they're being dragged down right now by the Nasdaq, and the Russell is also at times leading. You can see they rotate back and forth sometimes. So keep an eye on that. I'm thinking lots of bearish activity for this week, a little bit of shorting opportunities, and just keep your eye out for those. So if you got any questions, let me know. If you enjoyed the video, please hit like and subscribe. Let me know you liked it, and I will talk to you again soon. Trade safe, trade well, and take care, everybody.